Those who made it.
Good day, good people. Welcome to today's video. Today we're going to talk about continuation patterns. Last week we were talking about reversal patterns, and today I feel like it's good enough or fit enough for us to talk about continuation patterns, the kind of patterns that will give you an opportunity to scale in as you move into the confirmed direction of the market. It's one thing to identify a reversal pattern and enter at the top of the reversal or the bottom. It's another to scale in along the way. So we are going to talk about the reversal patterns, or rather the continuation patterns that I like, and or rather the ones that I prefer, my go-to patterns, and how to trade them, where to place your stop losses, the works. Yeah, let's get straight to it. Right, so as you can see in your chart on your screen, we have the flag continuation, we have the pennant continuation, and we have the triangle continuation. The first is, I believe the names of these patterns, the names of these patterns give out, they're self-explanatory to some degree. The first is a flag, and as you may see, it looks like a flag indeed. Like, we have an impulse, which is the pole, and we now have a correction, which is the flag, and then the market continues on the high. And then with the second one is a pennant, similar to the flag, but it's much tighter and it's a lot tinier. These are the kind of ones where you would find on the 14, or rather the 15-minute and 1 hour sometimes. These ones also you'll find on the 15 or the 1 hour, or even the 4 hour sometimes. And the same goes with the triangles, where you'll find them on the 1 hour, the 15, and sometimes, not always, but sometimes on the 4 hour. So the pennant is much tighter to compared to the flag, and then the triangle, I believe then the name does explain itself, where it's an expanding, there are two variables to triangles continuation. The first is the expanding one, where we have a impulse, a correction that starts off small and then it starts expanding itself before impulsing again to the high. Or we have another one that goes something like so. Let me change the color real quick. We have another one where it moves impulsively, and then the correction goes something along these lines, where now, unlike the pennant, which is extremely tight, which takes sometimes it takes 1, 2, 3 touches, and then it gives us a small touch to the low, and then it goes out. But these triangles give us a little bit of space, a little bit more touches, maybe 2 or 3 touches along the way before impulsing to the high. Don't worry about it, we are going to see chart patterns on the actual chart. So the one thing I would like to say about these continuation patterns is the fact that I don't want you to leave this video thinking to yourself you're going to take every continuation pattern that you see in the market. You can, and along the way, some are going to work, some aren't, but I strongly recommend that you combine these patterns with the reversal patterns that we spoke about last week. Link is in the description down below. I really advise you to combine these continuation patterns with the reversal patterns that we spoke about last week, due to the fact that if you do combine them with the patterns, or rather the reversal patterns that we spoke about last week, they have a tendency of working out the most, and they give us a higher probability, because at the end of the day, like I said previously, the forex game is all about probabilities. You have to get your probabilities in check. If you don't, you're gonna fall, right? You're gonna keep losing. You're gonna have consistent losses. So yeah, please combine these with the higher time frame confirmation reversal patterns. But we are going to go on the chart to see for ourselves what I'm talking about. So yeah, let's get straight to it. So we're going to start on EURUSD, and as you can see on the 4-hour chart, we see a continuation pattern on a larger scale, and this continuation pattern is one of the ones that we're going to get into later on in the video. So stay until the end of the video to get into these kind of patterns. But on this chart, the 4-hour chart, we see this formation setting. But we're going to get into the more nitty-gritties of the flags. We're going to start with the flags, and let's go on the 1 hour to see what I'm talking about. So after this formation that has this wedge, this rising wedge has broken out, we now see a continuation pattern, a flag, right? One flag. Right after this reversal pattern has broken out. So on the 4-hour, we see a continuation pattern on a larger scale. On the 1 hour, we see a reversal pattern on a smaller scale, and then on top of that, we see now a continuation pattern on the low, right? And then on top of that, we see another flag, right? And we see a continuation to the low, and another flag, and then we see another continuation to the low. Before all of this, we see a reversal pattern again here, which is a descending channel, and right after the descending channel, we see a flag right there before the market impulse to the high. So you may be wondering, how do I enter these ones? Where do I enter? Where do I exit? Very simple. It's nothing really complicated. It's just you calculate these pips from the beginning of the impulse, because the market moves in impulses, right? It moves in impulse. It does an impulse and a correction, right? Wait, hold on. We have an impulse, we have a correction, and another impulse. Those are the two phases of the market, right? We have an impulse, correction, impulse, correction, impulse, correction, impulse, right? So in order for you to trade these patterns more efficiently, you calculate the first impulse, the very first, from the beginning of the impulse, right? These pips here, and then you measure the exact same pips to the high, which I believe by this demonstration your TPs would have been hit right there. You get in here, you enter here, you place your stop losses here right below, you place your pending orders or at market execution depending, and you exit over here, which is perfect. And also with this example over here, we do the exact same thing, these amount of pips, and you calculate them from the breakout, and as you can see, boom, the market did go in your direction. Now this one is very beautiful because it gave you not only one opportunity to enter, but another opportunity and one more here. So you repeat the same thing over and over and over and over again. But when you combine these with the higher time frame structure that we spoke about, we are about to speak about, there's no need for you to enter and exit and just, you know, like a day trader, or to swing them. You can somehow hold, and I'll show you later on in the video how to do that. So this setup For this setup, the TP is over here. I believe it's hit. For this setup, we take the impulse, the first impulse, correction, breakout. Here's your TP right there. For this setup right here, first impulse, and I believe the market, yes, the market would have not exactly it would have maybe or may not have hit your TP. It would have hit your TP. It would have definitely hit your TP right there. So whether you hold or not, you can just scale in and scale out, scale in and scale out by choosing. If you understand the continuation patterns at large, you can scale in and scale out as you please and build a proper trading plan around that. So let's get into the next example. On this chart, we have another example where we come from an continuation pattern, in which we're going to get into very soon. And as we go on the lower time frame, we see here another impulse, correction, impulse to the low. In order for you to capitalize fully for this one, you do the exact same thing, where you take the impulse, beginning of the impulse towards the beginning of the correction, and then you calculate those pips. And as you can see, your TPs would have been hit somewhere there. Depending on your risk management and how you protect your capital, you most probably would have been kicked out here, due to the fact that you just keep moving your stops and protecting your profits. But either way, you're still gonna win. So let's move on to the next example. On EuroCAD, on the 1 hour chart, we see a rather interesting scenario playing out here. We're in a downtrend. We just came from a small channel, which is a reversal pattern, and then we see two continuations back to back, right? Back to back. And these ones, either way, like you can trade them as you please, but I do recommend that you do the exact same thing. You just relax and do the exact same thing. So first impulse, correction, breakage of that, your TP is right there, and your TP would have been hit. You know, you're in, you're out, you hold until your TP is hit, and you relax. So that's all for the flags. Let's get into the pennant. On this example, we're going to get into the EURGBP, and from the 4 hour chart, this is rather fresh. On the 4 hour chart, we see what is arguably a channel or a wedge, whatever the case may be, but I see this as a channel. So inside the channel, we're going to see some pennants playing out. So let's get straight to them. Right, so as you can see from the left, I mean, my goodness, look at this one. This is a small pennant right here, and you trade the pennant the same way you would trade a continuation pattern or a flag in that matter. You take the impulse and then correction, place your pending orders below, and then boom, you're in, you're out. 47 pips, you're in, you're out. Here's another example over here, right? Take you take the impulse, correction. After the breakage of the correction, boom, you're in, you're out. 70 pips. We have a reversal pattern right here, a channel. The market reversed. Impulse, correction, boom, there's your TP. I believe by now your TPs would have been hit. It's close to being hit right here. So that's how you trade these continuation patterns, man. It's really not complicated. It's not rocket science. It's pretty much straightforward, man. Let's get into the small triangles. With the triangles, we are gonna start with EURUSD, and this one is rather fresh. It's a It's a position that I'm in. So we come from a larger continuation structure, which we're going to get into later in the video. And right here on the 1 hour, we come from a reversal pattern, which is the rising wedge, and the market gave us a continuation here, which you would have entered, another continuation here, dropped. And now, like I said, there are two variations of these triangles. The first is the expanding triangle, and the other is the symmetrical one. So this one started small, and then now it started expanding its touches a little bit wider. But you are going to trade the same way. You take this impulse breakage, I believe somewhere down here, and as you can see, your TP is somewhere here. If I'm not mistaken, I am somewhere. The market right now is somewhere here. I'll update it, but I don't want to make this video too long. I am in this position, but we're somewhere here. And yeah, that's about it about this example. Let's move on to the next example. So on EuroCAD, we start from the higher time frame, the 4-hour chart, and we see a larger structure right here, which is something that we're going to get into soon. And let's go on the 4-hour, or rather the 1 hour. On the 1 hour, like I said, here's the larger structure. We see a continuation, a flag right here, and then we see 3 triangles, 1 2 3, and you're going to trade them the exact same way. Impulse, correction, breakout, your TPs here, boom, your TPs would be hit right there. Same thing over here, impulse, correction, your TPs somewhere down here. Your TPs would have been hit right here. Impulse, correction, or rather, let me take it here. Impulse, correction. This one is rather, it's not clean, but it's still a, a setup, a scaling opportunity for you to, scale in, and your TPs would have been hit here. So these are the kind of setups in which it's a sin for you to miss, man. You can't miss these ones. And to make matters worse, this structure, this downtrend, build a reversal pattern to the high. So imagine if you mix these reversal patterns on the higher time frame with the lower time frame continuation patterns. Imagine the kind of profits in which you're going to start experiencing, man. It's ridiculous. It's going to boost you, bro, like it is. So let's move on to the next example. On NZDCHF, we see an interesting scenario where we come from a channel, right? First impulse, rather first correction, impulse, second correction, impulse, third correction, extension, double top, and a breakout, right? So this is a reversal pattern, right? So let's go on the lower time frame. On the lower time frame, we now see here a rather interesting triangle that looks like a wedge, but it's a triangle in a way. Either way, regardless of the circumstance, you trade it the exact same way, without fault, without any, without missing anything. We trade it the same way. Rather interesting here. The interesting part is your TPs were not hit. Your TPs would have not been hit. For whatever reason, the market did not respect this channel directly, and it didn't go to the 90% rule of this channel. So that's another thing about the forex market, is that either way, like, the thing is, it could work, it could not work, regardless. It could work, it could not work. So always protect your capital. I remember entering this one, I believe it was last week. Yeah, I remember entering this one, and I booked my profit somewhere here, and I was kicked out by this move. and I was kind of confused, so I let it go. I just let it go. So I just let the market morph and do what it does, right? So yeah, let's go on to the next example. On GBP Aussie, we're going to start on the daily chart. We see this larger triangle, this larger structure here. The ascending channel, we see an ascending channel inside the ascending channel, and the market broke down rather impulsively. Let's go down on the lower time frame, and on the lower time frame we see a continuation pattern, which is an expanding triangle on a larger scale, which is the 1 hour, or rather the 4 hour. And we're going to trade it the same way, where now we see correction, impulse, correction, impulse, correction, impulse. There's a lot of continuation patterns here, and then we see an impulse down. If we're going to trade it the same way, you could trade up here if you want to, but I recommend that you know, keep it at you know, just keep it down there, and your TPs would have been hit by now. Yeah, your TPs would have been hit. And on top of that, we see another one here. We see a continuation pattern here. So these kind of setups combined with higher time frame trading can be really powerful for your trading, man. They can, I promise you now, but it's going to require a lot of your time and a lot of your effort for you to backtest and learn them on your own. So let's move on to the next topic then. On our second segment of the video, we're going to talk about two continuation patterns that are on a larger scale, you know, your 4 hour, your daily, and so on. And these ones you're going to trade differently, and you're going to put different stop losses, whatever the case may be, but you will see. So the first one is the triangle and the wedge. Now, for those of you who are more experienced, you may be wondering, why is the wedge included here? The reason being is because a wedge, a rising wedge, it's a rising wedge or a falling wedge, regardless, they're very neutral. They can be reversal patterns, or they can be, you know, continuation patterns. And as for the triangles, on the other hand, in this case, we're going to only focus on the symmetrical triangles, not the expanding ones. So let's get straight into the chart patterns. So we're going to start with the Aussie CAD on the daily chart. As you can see, we come from a larger structure and we broke out. And if you go on the 4 hour, it's much clearer. We come from this falling wedge, and right here we have a triangle, a symmetrical triangle. And how you trade these ones is very simple. So the first touch from here, the first touch, second touch, third touch, fourth touch, fifth touch, then we have the break to the high, right? So you take the first touch, the second touch, you calculate these pips, you measure that with the amount of from beginning from the breakage of the structure, and you place your TPs right there. And in this case, your TPs would have been hit before the market starts retracing the way it's retracing now. So that's how you trade these triangles. Let's move to the next example so that we keep this video as short as possible. With EuroCAD, we have a very large structure here. We come from an expanding triangle here, which you would have entered somewhere up here to the low, and when we go to the 4 hour, we see a triangle right there. Here's the first touch, second touch, third touch, fourth touch, the fifth touch, and then the market didn't go for the last touch and then went right back down. So how you trade these ones? Very simple. First touch, second touch, those amount of pips. Let me do this way. I believe this is the same amount of pips. First touch, second touch, and your TPs, I believe this one, yeah, your TPs are somewhere here. And as you can see, the market is still dropping. I believe the market is somewhere here right now. So yeah, your TPs would be somewhere here. Let's move on to the next example. The last example, this one is rather recent. This is Euro Aussie. It's rather recent, and it's a position that I'm in. So with these ones, it's a descending triangle. Even though it's no longer as symmetrical as the previous two examples, but either way, it is still a triangle because it's continuing to the low, right? And you're gonna trade these ones the exact same way. First touch, second touch. Let's grab this way. I believe it's the same amount of pips, and then you drag this to the breakage, and I believe, yes, this is the zone that I've already drawn here. The reason why I've drawn it is because I'm in this position, so I'm holding to the low until here. And you know, imagine if you combine that with the continuations that are gonna, you know, keep printing themselves. I believe we have already spoken about these continuation patterns to the low. So imagine holding these ones with the confluence of this larger structure to the low. It's amazing the amount of profit you're gonna experience for yourself. So let's move on to the next segment of this video. Now with the wedges, like I said, they are very neutral. They can be reversal patterns or they can be continuation patterns. And with the first example, we're going to still remain on Euro Aussie. And as you can see, the market came from a rising channel, right, an ascending channel, broke out and gave us some sort of a wedge. It's not the cleanest in the world, but it's still a wedge. But we're going to treat it the same way as we do treat the triangles. We're going to take the first touch, second touch, calculate those pips, and the breakage is the amount of pips in which we're going to go for. So the market would have hit your TPs here before pulling back the way that it did. So these ones are very powerful because they are on a larger scale, on a larger time frame. So please do not ever miss this ones. Imagine, just, I'm gonna keep saying this, that imagine, you know, combining these higher time frame patterns with the lower continuation patterns. It's insane, bro. It's insane. Let's go to the next example. On the next example, we have AUDCHF, and as you can see on the daily chart, we are in a descending channel, and we have in the descending channel a very steep wedge where we have the first touch, second touch, third touch, fourth touch breakout. And we're gonna do the exact same thing that we've been doing on the previous example. First touch, second touch, calculate those pips, breakage, and the market gave you your TP right there, and it moves so impulsively to that TP. This one would have been so beautiful. So yeah, that'll be all for this one. Let's move on to the next one. And on the last example, we have ourselves GBPUSD, and we now have a, you know, an impulse continuation, another impulse, and now we have a wedge. And we're gonna do the exact same thing. First touch, second touch, calculate those pips, and here you go from the breakage. And we now have our TP over here, which would have been hit by the time this candlestick pulled back. You are in and you are out. That'll be all for these setups. These are the kind of setups that I personally go to, and these are the setups that I have in my trading plan, and these are the setups in which I combine with the higher time frame and the lower time frame continuation patterns, and that has helped me a lot with my trading career. So I would like for you guys to go back test these, draw them, familiarize yourself with them, try them on a demo account, try them on a small account, and grow your funds for yourself. Otherwise, that'll be all. I hope you guys enjoyed this video. Comment down below, hit the like button, hit the subscribe button, and see you guys next time. Peace out.